Welcome to TradeTheMBA.com. This is John. This report is for the 21st, so the solstice has come, and, well, we got a little bit of the fading we saw was coming from the short-term buyers fading, and then we had the little peak of the orange coming forward, which just indicated that we were a little overbought as we were reaching this top line. And this was what I was referring to as that sell the news event. The buildup for the tax hikes came, it finally went through, and so people are taking a little bit of gains. This is some of that volatility I mentioned would happen at the end of the year, simply because there were those that were chasing return, others that had achieved it and need to start rebalancing their book to set up for the new year. So NQ likewise matching perfectly. It's not a horrible decline. It's rather reasonable. The rise in the euro certainly keeping things intact, which is just insane. You have this massive growth in the U.S. European Union is stagnant and talking about quantitative easing, and yet the euro is artificially elevated. Go figure. Certainly helps for earnings coming back into the U.S. And oil peaking out up here a little bit, because what we're seeing is increased demand and also increased supply. So even though price isn't going to move a whole lot, because obviously you can increase inventories and things like that, that's less important than seeing the demand side and the production side increase, because that lets us know that economic growth that we're seeing is real and will have a continuing impact. And this is no shock. In fact, this should continue to just keep eroding because, people have woken up to the idea that you can't have that kind of growth without getting some form of inflation, though I would disagree that it's going to be at a significant pace in the short term, simply because we don't know the extent of the labor supply. We know that there's a vast number of those that are still not in the workforce, even though you're seeing these super low unemployment numbers. The reality is that the supply of labor hasn't squeezed yet, and when it squeezes, it's going to be fast. So you have to be in the bottom side of the gold trade. So the return on that, and also you could look at your Bitcoin, which we can see coming off of its peak move right there, back down to the lows. Had a nice little improvement in the shakeout on the test of the lows right there. That was a good opportunity. And you can see the dip of the orange for the buy signal, and it shot up all the way back to the peak. So should be coming right back to our green Fibonacci 50% level. Pretty straightforward read on it, and I think we're just about getting enough data that, we can even look, just flip to a daily chart and then see how little data there really is. So just click daily, and it should convert it pretty quick. So you can see from a daily standpoint, we don't even have enough data points to begin to chart anything. So not very helpful from that standpoint. So we will leave it back at the 15-minute range for now until it builds up a little bit more. It won't be long, though, before we have it with data, maybe another week or two, and that should be enough to get into the bigger time frames as well. For broader plays, though, this 15-minute chart works very practical from a future standpoint. Be nice to be able to go into the tick side, though, because that will eliminate time from the equation, and it will become just about the trade, which I always like to look at. So gold is continuing to move, broke into the new zone of the negative 13.5 right here. It's kind of flattening off a bit, though, and you can see short-term buyers are fading it. So we could be getting close to peak little stagnation and then get that slight retrace. That's going to be the probably the one that will be the best buy. And from a 5K standpoint, so you saw the pre-market, we shot all the way back up to the peaks, but it got perfectly overdone right up there at the top as we started to break down through the ABM. The DOC spread actually took place just a fraction earlier, one bar right back here on the break of the ABM gold, and immediately started breaking through the Fibonacci levels, and so you could tell it was going to go back down to the zero on that breakout, and it did come back to the zero, attempted to get back to the 50, couldn't do it, and that created the new low, which created the better buy right here, even though it was a slightly lower shakeout. Once that shakeout improved and it got above the 23% level, it was able to get up, but that was an indication that you weren't likely to see too much of a break. And when you get to that 50% level, you should be above that zero line on the shakeout if you've got enough strength and momentum in this particular case. Not the case. So back down, and this is part of that ebb and flow that we're going to see for a little while. We get declining lows there, which means we've got a pretty good chance of elevating to them on our baseline red here with the Fibonacci level. So that decline in the overall value is just an opportunity, and plus there's just going to be a little softness. I mean, the excitement's kind of over. So what else are you going to give people a big boost for? Plus it's the holiday trade, so it's going to get thinner, and particularly as we go into tomorrow, things should be pretty calm. But that said, I hope everyone has a great holiday period and enjoys the tranquility of it. I don't know what that means, because for me it's very hectic with all the running around and trying to get everything done. So it's never quite as tranquil as the vision of it. But hopefully it'll ease off in a little bit. But that's a different story. For now, we're just happy with the volatility because these ranges are pretty decent. No objection with them whatsoever. So we just have to go with what is and take advantage of it. As always, though, trade well, and I'll post our stocks and charts on the Skype chat as warranted. Trade well.